The upcoming Future Blockchain Summit coverage is brought to you by Cook Finance, a revolution in DeFi asset management.
Aydin Kilic joins us today. He is the COO and president of HIVE Blockchain, and he is an expert in all things mining, especially when it comes to Bitcoin and Ethereum, which is the focus of HIVE Blockchain. Welcome to the show. Aydin, is your first time.
It is. David, thank you very much for having me.
We'll be talking about HIVE Blockchain in just a minute, but give us a bit of your background. I mean, you joined the company recently. How did you become so knowledgeable about blockchain technologies?
Yeah, so in late 2017, I founded a company called Fortress Blockchain, which I took public. I raised 20 million bucks, had some big institutional shareholders in that company, and I ran it as CEO for a few years. So that was a Bitcoin mining company. I was actually inspired by HIVE being the first public crypto miner, and I studied their business case. And I'm a numbers guy. I enjoy math, and what I loved about cryptocurrency mining is that it's so quantitative, and you can almost think of it as a grand exercise in unit conversion. I mean, you're essentially converting energy into hash, which is then converted into crypto. So everything can be meticulously modeled, and then of course there's execution and building on your data centers and allocating capital to acquire ASICs at an attractive price and make sure that you actually ROI and eventually free cash flow. So that's sort of the business in a nutshell. So anyways, I endeavored to do that with Fortress. And, Frank and I have been industry friends for years now. We first met on a panel in early 2018. And we've been friends ever since. And so it just seemed like a natural fit to help grow a company like HIVE. Fortress ended up pursuing Bitcoin mining for natural gas, flared gas, in sort of off-grid. HIVE is focused on building and operating its own data centers in green and clean jurisdictions using either hydro or geothermal power.
Right.
And with the NASDAQ listing and Frank as an executive chairman who is an amazing mentor as well as visionary, it just felt like the right steps. So I'm super excited to be part of the HIVE team and running the company with Frank.
Aydin, let's talk about Ethereum now. Rough summer. It's been volatile. It's had a bit of a bounce back starting last week, but so far, since I would say the last month, it hasn't been outperforming Bitcoin. Usually in a bull market, it outperforms. So I've been reading various articles, and various pundits have different opinions as to why that is, but the consensus seems to be that there's a lot of competition right now for Ethereum from so-called Ethereum killers, Solana, Polygon, Cardano, etc. Tell us about some of the core problems of Ethereum that some of these other coins are trying to exploit right now.
Yeah, that's a great question, David. It's always nice to do interviews with counterparties who understand the bedrock of the industry. So I think one of the biggest things that the investing public and the general users of crypto aspire to see is large-scale adoption of any blockchain functionality. And so with both Bitcoin and Ethereum, transaction fees have come to light as an issue that perhaps impede the widespread adoption. Put simply, sometimes it's really expensive to send Ethereum using the Ethereum blockchain, and ditto for Bitcoin. NFTs are super popular now, so people are looking to mint new NFT projects on Solana because the gas fees are less. But the thing is Ethereum is still within the context of DeFi and NFTs. Ethereum is still sort of seen as the prime conduit, like the most well developed and largest sort of smart contract blockchain. And so I think that what happened earlier this year with the London fork, it really addressed the usability and scalability issues. EIP 1559 is what I'm referring to, where transaction fees, egregious transaction fees, actually were sort of attenuated. And this the knee-jerk reaction, I think, from the mining community and maybe some pundits were like, oh no, this is going to make mining Ethereum less profitable. What it actually did was it attenuated the crazy spikes in transaction fees that we saw in like May and June of this year, which admittedly made Ethereum mining incredibly and extremely profitable on certain days, but it also made it really expensive for the users. So if you want scale and you want adoption, you need it to make it accessible for the users. So what EIP 1559 is basically ironed out those really egregious days of transaction fees. And we were carefully watching it, and we have one of the largest Ethereum mining operations in the world, and certainly as a public company. And we've got a phenomenal team in Europe, really great intellectual capital there. And I was actually in Sweden at the beginning of September, and we had a great brainstorming session. We actually studied the mining economics, both in the 30 days preceding EIP 1559 and the 30 days following it. And what we noticed were our pool payouts, all other things equal, with the same hash rate, were consistent both before and after EIP 1559. However, difficulty had increased in that 2-month period. Again, 30 days before, 30 days after, 2 months. And so if your payouts are the same, but the difficulties actually increased, what that tells you is, it was actually slightly more profitable after EIP 1559, because again, you're getting the same payouts even though difficulty was increasing. So, and then furthermore, I've since had a broader look at the 60 days before and after, and we're still seeing very healthy Ethereum mining economics post EIP 1559. So I think that there's a great demand, and it makes it more predictable for users who want to use Ethereum blockchain, whether they're sending or receiving ETH, whether it's smart contracts for DeFi, or whether they're trying to mint NFTs, because everything involves gas. So I think that the Ethereum development community is has incredible foresight, and Ethereum mining remains a very profitable business, and Hive has been doing it for a very long time and has a lot of phenomenal in-house expertise when it comes to doing large-scale Ethereum mining.
There's a lot of talk about Ethereum 2.0. If and when that happens, Aydin, what's going to change with Ethereum?
Well, it's if you're referring to the proof of stake conversation, I think that's been discussed or at least considered for years, and here we are, and there's incremental. One may even take the position that EIP 1559 actually further substantiated proof of work, because now it allows proof of work to continue to be accessible and with gas fees being more measured, but still making Ethereum mining profitable as a business for the mine operators. So I think that the blockchain will evolve and develop. But the other thing that Hive has with its large array of GPU cards is we have the ability to do other things like HPC, high performance computing. And so I know Frank has spoken about that, and I don't want to give away our secret sauce, but it's something that we've been working on as well. Sure. And so it diversifies our business income. So, I think, having been operating for 4 years, through a couple crypto winters, it's all about adaptability and being able to, grow the business. So we're very mindful of all this stuff.
I want to show you a chart here. This is Bitcoin versus Ethereum. So what I've done here, Aydin, is I've just taken the two series, I've rebased both of them to 100, starting from exactly a year ago. And as you can see, they've more or less moved in tandem with some outperformance from Ethereum. Now, in the past, people have told, even today, people have told me that they buy Ethereum as sort of a leveraged play on Bitcoin. But going back to what you said about the potential of transitioning from proof of work to proof of stake, can we potentially then see this pattern diverge? Can we see a divergence between Bitcoin and Ethereum where they start moving in completely different directions? Again, keep in mind also that, like you mentioned, Ethereum is the base layer protocol for a lot of DeFi projects, NFTs as well. So it's got more utility use cases now, I would say, than Bitcoin, right?
There are layer 2 applications on Bitcoin as well. There's
sure.
Lightning, and Blockstream is doing a lot of interesting stuff. But I couldn't actually see that chart because it's sort of off to the side of the screen. So is that the price action of Bitcoin and Ethereum?
Yeah, price action. So basically what this chart illustrates is that these two coins have up till now moved in tandem. So when Bitcoin goes up, usually Ethereum goes up to various degrees, right? So sometimes Ethereum outperforms. In the last month, it hasn't been, but they've moved in the same direction. My question is, can you expect this relationship to hold in the future, or can the two coins start to diverge?
I think that the relationship between Bitcoin price and Ethereum price, it might be coincidental, or perhaps it's driven by investor consumer sentiment. But if you're sort of asking that question to someone who is the president of a global company that mines Bitcoin and mines Ethereum, what I would actually point out and distinguish is one must understand the fundamental economics of mining, and that is contingent upon the price and also the difficulty, right? And so usually you hear about people who talk about, hey, we're just signed a deal for 20 megawatts or 40 megawatts, and we've ordered all these ASICs and we're plugging them in, and you get a certain hash rate. So when you do the math on all of that stuff, you get a certain amount of Bitcoin per day or Ethereum per day that you can produce, given a certain capacity. So for example, if you have a megawatt of Bitcoin mining capacity filled with new generation ASICs, or you have a megawatt of Ethereum mining capacity filled with newer generation GPU cards, and you monitor the output of those given the same consumption of energy, right? Because remember at the beginning of this interview, I suggested that one can consider the mining business is a grand unit conversion. You're taking energy and you're converting it into hash rate, which then you get rewarded in Bitcoin, Ethereum for. So what I'm trying to say is that it's probably better to look at the mining economics and how those have performed. And I could see the first half of that graph. I couldn't see the second half, but you mentioned that it seems like Bitcoin may have outperformed Ethereum in price action, but the reality is right now.
Well, just in the last month. I mean, if you look at it from a year-to-date perspective or a year-over-year perspective, Ethereum is still up substantially over Bitcoin. But just in the last month, I've noticed that traditionally in the past, for example, when Bitcoin goes up, let's say 10%, Ethereum maybe moves up 15, 18%, right? But in the past month, it hasn't been doing that.
Yeah, and so I mean the price action of each. There's so much liquidity that drives either. I don't think anyone can specifically explain or state exactly why. I mean, there's also all sorts of macroeconomic factors that one can point to. But I think what can be more readily explained is the mining economics of each cryptocurrency and what that actually looks like on a time varying basis.
Absolutely. So let's talk about mining then. You mine both, well, HIVE Blockchain more specifically. Which is more profitable to mine right now, Bitcoin or Ethereum?
Yeah, that's a great question. So the just building on the previous point I was describing, if you have a megawatt of power and you've built a data center and you're operating a bunch of ASICs and you're mining Bitcoin, with new generation gear, you might be doing roughly, and I'm giving broad numbers just for the sake of a conversation, roughly about 3.5 Bitcoin per month. If you have at least a Hive, and we've got some of the best NVIDIA GPUs that are on the market right now. We earlier this year announced that we were a strategic partner, and so we have some of these chips operating in about 1 megawatt of Ethereum mining per month. If you denominated it in US dollars, right? The public company, we report financials in dollars. So on a daily basis, you look at the amount of Ethereum that was generated and you converted that to Bitcoin based on daily market price. A megawatt of Ethereum mining right now produces over 10 Bitcoin per month, right? Bitcoin equivalent, I should say. So that's almost triple the output of 1 megawatt of Bitcoin mining. So Ethereum mining is incredibly lucrative. It's a little bit more involved in terms of the day-to-day operation. But again, Hive has a great amount of expertise with almost 20 megawatts of Ethereum mining capacity, and having been doing this for several years now consistently. So, our financials are annual, and our Q1 came out recently. We had record numbers, which was a function of both. But to answer succinctly, Ethereum mining is more profitable than Bitcoin. And if you looked at it in terms of profit density based on power consumption, it's almost 3 times more profitable right now,
Wow.
which I think is quite remarkable.
Okay. It's 3 times more profitable. All right. So let's finish on your outlook for the price growth. Is it going to be 3 times more profitable for investors as well to hold Ethereum than Bitcoin?
Again, so I
know those two things have nothing to do with each other. I'm just trying to tie two questions together. So.
Clever. Well, again, I would suggest that one must always separate mining economics from price, because we had Bitcoin price reached a peak of 60,000 earlier this year, but later, when there's a huge drop in difficulty, even though the Bitcoin price was not as high, mining economics recovered substantially to their peaks in Q1 this year. So it's a function of both. So, but what I could say is, I mean, certainly if you were an investor looking for a strong value proposition, and you perhaps did your research and you looked at market cap and enterprise value of Hive amongst its peers, you might find that Hive is very attractive right now in terms of value, and the fact that we've got one of the biggest and best Ethereum mining footprints in the industry, and a great treasury management, then you might see that Hive is has a great value proposition right now, and especially with the future outlook. So,
well, I know that the price is not obviously, the price and money economics are two different things, but one might look at the price share of the share price rather of Hive Blockchain and say that, well, it's very much linked to the price of Bitcoin. Very tight correlation there. So
agreed. Yeah, and I think that the investing public looks at cryptocurrency mining companies as a proxy for investing directly into cryptocurrencies. And the thing is there's economies of, people like to say there's economies of scale. I think it's more about economies of efficiency when you're developing a crypto mine. How good is your PUE? How cheap is your power, and how can you dollar cost average your OPEX down, allocate capital in an intelligent way so you're getting hash rate up online within the shortest time period from deploying that capital, and making sure you're not overpaying for your ASICs or your GPUs. And so all of those considerations and all of that execution, and all the high voltage electricity design and implementation, and novel cooling systems or lack thereof, if you're clever enough to figure out passive cooling, that those economies of efficiency give rise to some miners that perform better than others. And so then, as an investor, they could say, well, man, it seems like the guys at Hive really have this dialed in and well thought out, and they've got a great team, and they're diversified in terms of they're operating both Bitcoin and Ethereum mines. They might look to that and see more value than just, oh well, Bitcoin is up, so Hive is going up. But yeah, most certainly, and there's some really bright guys on YouTube who parse all this stuff out, and they build Excel sheets, and they get it. But I think for the average investor, they see it as a proxy for the price of crypto, which is totally fine as well. Because at the end of the day, as there's more widespread adoption of cryptocurrency and embracing of publicly traded cryptocurrency companies, we endeavor to flourish for the investing public.
Excellent. Aydin, I want to thank you so much for coming to the show today. Excellent thoughts, and I'll definitely get you back on to talk more about money economics. Thank you.
Yeah, thank you for the questions, David. It was an absolute pleasure.
Pleasure's all mine, and thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe to our YouTube channel.
The upcoming Future Blockchain Summit coverage is brought to you by Cook Finance, a revolution in DeFi asset management.